SMF Street Traders, once again, this is Apple. The nice thing about it is it's a $280 call. So when we were shorting Apple up around that 290 plus handle, 88 came into play, is that they've taken all of this inflated premium up here. This is where the public buys and holds them down. And what your job is to do is buy them wholesale when the equity had its big breakout. This is how these options broke out with the equity price. So when Apple moved up in value, right here's the Apple. When it moved up in value, it made a huge inflated price in the option. So when Apple corrected in price and came down well off its highs, these prices declined because they'll never stay up here, ever. No one, go find me one time. Right now, I'm going to give MMT Scotty some price action. All right, rises too, because you're going to get the pre-market is that we're gapping up in the futures market, so that makes equities gap up, and because Apple is gapping up, that means the value of these are going to go up on the open. So set me an alarm at 590, 620, 650, 680, and 710. Rises 2. That's off the volatility gap with a burn and the equity breaking out. The gap ratio right now from the close was 278.64. That is a nice gap. That means the price of the call option, which is the strike price, as long as it goes above $280, these are wholesale prices. We told everyone when we were shorting Apple that Apple, the equity, because of the inflated calls, that this was going to correct. And it's had a nice correction over the last couple of weeks. Here's a weekly chart of that call action. That's the inflated part. But more importantly, let's go to Apple. Because what you MMTs need to understand that when it comes to options, it doesn't matter. When they're that inflated, guess what's going to happen? Over here on the weekly chart, when we made the highs here, MMTs, traded all the way up there to the top. There it is right there right now, 294.73. The low of this cycle reversal, which is technically a reversal, until I close back above half of that weekly bar at price action. At 288.83 is my resistance. Let it be known. And as long as I'm closing below that price, that means that these are tradable on an intraday level every day at wholesale entries and retail exits. So the skills that you get are the pricing skills of the entry at the wholesale price and selling back to the retail public. And the amount of pullback that we had is all related to, the same thing. Prices are inflated. The call side was inflated. That meant the equity was short-term overbought on a weekly level, and these were inflated and they had to come down. Now that they have, this is where the MMTs start to buy, as the public rides them down. So the public buys all the supply right in here. Once all the supply has been sold to them, well, down we go. This is the SMF wholesale market maker pricing mechanism control of the wholesale market, where a market's made, MMTs. And a market's going to be made in this 280 call within the volatility gaps. They're going to gap them calls up nicely because they're no longer inflated. So when you look at volatility, as you look at the upside volatility. So from yesterday's selling in the broader market, You got this right down here to where that breakout started on those 280 calls. They expire here in a couple weeks. So what? Sometimes we trade them on the day they expire in the last 15 minutes and make a lot of money. What matters right now is that the MMTs get the wholesale bids and sell back to the public, because until I can get a, and that trade remains the same, because that's going to be the wall of resistance right there at that. This is the chart for the Apple. That's the weekly, and you better be advised. That's 288.83.